Hello, traders. Today's video I want to make because it's a very, very important aspect to trading, just overall psychology, risks, and understanding your personal risks, your personal trading psychology, and mainly, right, over trading and tilting, right? So it's a video that I know a lot of people should watch because it explains a lot of components from a more seasoned trader myself that has gone through this multiple times over, and being able to come back mentally from tilts or mentally from periods of trading where you don't necessarily do as well, and you find yourself kind of emotionally trading more so than trading with your plan and with the information that you're given. So this is from January 11th, right? And as you can see on the screen here, there were a lot of trades that went like awry realistically. Start off the day good, pre-market with CPI, right? Just a little trade, a little feeler. And then you can see just constant buying at not good areas and unreasonably so. So one of the first things that I do want to mention is that every trader should always have in mind what their max drawdown on the day is, right? Dollar amount. Because that has to be followed regardless of if you find yourself in a tilt position. Because the worst thing you can do is blow out an account by doing stupid things and trading emotionally without actually following some kind of a plan. So I trade twos and threes coming back to the new year on the minis here. And realistically, right, my max drawdown on my account is around $3,000 to $4,000. So on a day-to-day basis, that suggests that gives me a lot of room to look for trades, break down trades. Another thing to understand is you never want to go past that limit. You have a limit that's set out for you, and realistically, you should be, as a trader, your goal is to have more green days than red days, so it really smooths it over. Because on a green day, I'm looking for about the same, generally more than my max drawdowns. The max drawdowns are rarely hit, and today was one of those days where I was extremely close to hitting that max drawdown on the whole account for the day. So trading, right? Another thing that I do want to talk about throughout this is that trading is about one, following your plan, and two, not being afraid of trying a trade in an area more than once if it has something to do with your trading plan, right? Because if you're just trying and buying like I pretty much was throughout this whole downward move, then you're not going to get too much out of it, right? You're not, there's no edge in this. There's no edge. You're trading emotionally, and the expectancy is to lose and to take these losses. So before I go over these, right, I want to talk about a few other things. I'm going to break down the trades that I have in store here, the ones that I have on my screen, talking about the areas that I was looking at, why I took the trades, and mainly what I can do better and what the plan was, right, leading up into this. Because we had CPI coming out pre-market, and it came out hotter than expected. We pulled back from the highs and we were holding some of the key areas. So I looked for some shorts, right? I was up like 600 bucks pre-market, about 6 points on two contracts, solid. And from there, right, things kind of took a turn. Now, when things take a turn and you take your first loss after you had profit, right, emotionally and psychologically, a lot of traders are looking at this as, oh, okay, I need to make that back, or I took a loss. I need to get back to where I was, or I need to make back the money that I lost. And you start taking trades that are not necessarily good trades, that are not the plan. And when that happens, you have to notice it right away, take a step back, look at the bigger picture, and remind yourself of what the plan actually looks like. So if I take into consideration what happened today, right? What had happened today is we want to divide our areas based on distributions and volume and understand where these guys sit. So on today's session, we opened somewhere here. I believe we got a pump up, pull back, then pump back higher. One of the main things that I need to notice here is that the distribution legend of key areas into the high 20s, right? And as you can see, all of my trades are buys. So the first trade I was buying into the massive resistance where traders are actually getting trapped on the long side. So again, first and foremost, I take a loss there, right? Because I was looking for the breakout to continue with a lot of buyers coming in. That didn't pan out, and we started pulling lower. And more so than that, right? There was a lot of sell side on this DOM, and I'll do a little replay in just a bit. But if I'm looking at this and I don't have the information of the current day, right, and I'm only looking at the prior sessions, the prior session and the sessions before and the overall profile to give me some kind of information. This 50-day profile gives me a lot of information because I can section off blocks like this, right? And then obviously into areas on single volume areas. There's a lot of volume outside of the value area down into this mid 70s. So it's a huge area, right? I can look at weekly profiles. I can look at a lot of different things. But if I section these off, right, and I open within this profile at towards the tops of the profile, generally speaking, there's some bearish momentum that should strike the market to pull us back down probably into this block over here where we had a lot of volume over the last few days around that 05 massive pivot. And then we can readjust and see what happens into that area. The acceptance below, we have a very clean path that would want to target into the mid 60s. And along the way, you do have a few areas like that 88, and then you can see 88 held extremely well multiple times over. A lot of volume was built out there. Then a lot of volume that was built out into this low 70 where we started our most recent rally. So generally, right, if you accept a distribution to the downside, you should lean more on the downside to target areas even lower. If you're at the top of a distribution like this, where we failed to make new highs off the open, a lot of buyers got trapped, there's bearish inclination on this, right? So I was very stubbornly looking to buy a lot of these dips, and you can see, right? I bought 28, I bought 25, I bought 17, and then I bought 11 and 3, right? So 5 trades, right? And only one of them was justified, right? So this puts people in a bad mindset and really mess with the emotions. That's how a lot of people blow out accounts, right? Especially if you haven't done this before and you let the emotions really take over. Like, shit, I just took like multiple losses in a row. Where do I go from here? Let me just keep going. And another bad thing that happens is that people start flip-flopping. So they'll get long, they get stopped out, they start shorting, right? And in this case, probably would have worked, but they get long, they get stopped out, they get short, they get stopped out, and they continue flip-flopping. Now, it's not bad to have a bias, but when you're this stubborn at any area and you're just thinking, let me just make the money back, let me get back to where I was, so on and so forth, it really turns into a messy day. The best thing that you can do is, right, you take 2 losses, take 2 losses back to back, right? This is a good rule. If you take 2 losses back to back, you have to take a massive step back from the markets, right? Identify where you're at, look at this volume profile chart, understand what is happening on the profiles, right? Where you stand, how the order flow is coming into the market, and then, right, start thinking, okay, what does the next actual probable trade look like in this circumstance? So if I were to do this again, let's say I did buy that 28. I bought 28 longs, 48, 28 long for the breakout, right? Let's say I bought them and I got stopped out, right, naturally. What I should do at that point is just like shake it off, take a step back, understand where I sit at. I'm at the top of a distribution. There's no need to buy it. Plus, a plethora of buyers got stuck on the long side while sellers came in aggressively. What that tells me is that there's most likely going to be some more downside, and you're probably going to be targeting the bottom band of the distribution, which would find ourselves around the 48.05 area, this bottom band of the distribution that has held multiple times, right, for support and resistance over the last few sessions. So that's step number 1. If you find yourself in multiple losses back to back, right, you're always going to have to pull yourself back, take a big picture breakdown and analysis of what's going on, and then, right, you can continue realistically, because this market drops from 48.30, let's call it, all the way down to nearly 47.70, right? About 60 points, almost 60-point move to the downside. Very direct, right? Very, very direct to the downside. And not a single short was taken throughout that 60-point run, right? There are moments where it makes sense to look for the longs, but generally you want to follow how the distribution, how the order flow is going about. So if I took a step back here and we come back into this '05 area and they just dump right through it, right? You're going to be targeting a key area that's at these 88s, right? And okay, 88, you'll see what happens there. But generally speaking, you're probably going to want to short back below this pivot because we've accepted into this larger distribution, suggesting that there's a lot of volume to bring us lower and lower. So take a step back, reassess, and understand where you also sit from your max loss capacity on a daily drawdown. This is why some people do like to start with like online prop funds where you get funded and you have a max daily drawdown because you don't overstep these boundaries where you can blow accounts. In this case, right, if you a lot of people do end up blowing accounts in situations like these because the loss is too much to handle. If I have, for example, $100 max loss on the day and I'm trading micros, I have to abide by that, right? I have to abide by that. No seasoned trader is even absolutely safe from blowing out, right? Keep that in mind. As long as you abide by your risk management and you have confidence in your trade and you're trading clearly, right? You can look for other trades. Because if you're trading out of a place of emotion, you have to take that into consideration. Always, always, if you're in a tough spot in trading, you take a step back and you make a little checklist of what it is that's going on. Have I followed my plan? Am I close to my daily drawdown? Am I trading out of emotion, fear, and greed? Or, right, am I trading based on plan and things aren't necessarily working out? Regardless of the situation, if you hit a daily max drawdown, whatever it is, you have to take the loss and just move on. So what if it goes in your direction afterwards? The point is you want to live to fight another day and not teach yourself and learn that you can just continuously trade every single time, right? So if I'm looking at this, there's two areas that I'd be a little more inclined to buy where a lot of volume had been built out. This like 88 and then potentially into that mid 70. So, right, I get a little eager in this circumstance. I buy these 91s, I take a stop right into the lows, then I buy the 89s again. Took one off here at the '01s, right? Very, very strong move. It comes up, and the last one was taken out of break even. So kind of fumbled that one. Tried to pick it up again, took a stop. Second time we come back into our area, and what happens is a lot of buy side comes in, rejecting these big sellers, right? So at the bottom, when we do our little replay, you'll notice that in this area, this was the first real area, right? Here was pretty good, but this was the first real area where sellers are just selling into the lows and getting nuked by buyers, and the sell side gets pushed aside, allowing the buyers to step in, right? So I took some here, added a bit here, right? Decent moves into these like 84s, 83s from that like 75, let's call it, nearly 10 handles, and then trying to let the rest run. Because I know that if we can break through these most immediate tops that have been rejecting, these like 84s, and especially if we can break through this 88, right, you're going to target the next band of the distribution, which finds itself at that '05 area, '07, right, in between this block. Because if we take a look at our profiles here, right, if I'm long down here, we've got a little ledge here, then we've got our ledge over here. So these are going to be two major targets. Anything above, right? You could be targeting this kind of ledge that's shaping up here, then obviously into that 28. But I was fully out of that position over here into this like 17 or so. So this last trade literally managed to save the entire day. And if I had limited myself to only trading my plan in my areas, even though, let's say I was still buying, right? I would have been limited to a long over here, right? This one would have not worked out 100%. This one, right? Maybe I bought it too soon. Maybe I bought it again. Let's say I took the same trade. So I'd have two losses and one win. I'd still be green because I'd be down three handles here per contract. I'd be down three handles here per contract, and then probably up like, I don't know, like 15, right? So I'd still be up about like 9 points, even if I took these three trades. If I'm just trading to plan, right? And I'm still just trying to buy this. And let's say I buy it here again, we take another -3, and then I buy it over here and we take this plus 40, right? So it extinguishes, we'd be up like 46 points by the end of the day. Now, I'm not saying always stick to your bias and your thinking like I have to be long, I have to be long, I have to be long. But I'm saying that even if I did, if I was trading based on the distributions in the areas, I'd still come out on top in this specific example. Now, if I was trading based on our distributions in our areas, right, I probably would have or should have been looking for more shorts on the session, right? Especially on the acceptance of distributions to the downside. You accept a distribution like this, you have an area around '05 that needs to be sold to go and continue to try and press back down into these like mid 60s. So if I'm looking at this and I'm trying to create a strategy and a journal and learn from this from a psychological perspective so I don't tilt and so I don't get this aggressive in the market. It's always going to come back to let me step back and look at my plan because if you're just trading just to trade and you just trade areas because you lose some money and you're like, "Oh, okay, well this is where I think it's going to turn." There's no edge in that and you should expect to lose realistically. That's exactly what this day was shaping up like. I'm like, "Well, it's shitty, but I deserve it because I was not trading to plan. I was not taking the trades that I should have been taking." And I'll break down exactly in relation to the profile and the DOM, how the order flow gives you a better understanding of who's in control throughout the day. So let's do that. Let me just go into a different account here. We'll go on Sim and then take a look at just jotted down just the principal levels so we can see them here um, on this as we start this replay with the DOM, right? Eyes on the DOM, eyes on the, what's it called here? The profile as well. And we're coming into the market open. So we want to jot down how the middle columns here interact because this is where you'll see a lot of market buy, market sell. These are the market buy and market sell columns, seeing who's coming in at market, sizing, and also we want to take into consideration what happens on the delta. There's one very, very, very important incident that happens near the open, right? Well, first and foremost, one of these main things here, 30, right? Someone slaps in 700 on the market, buy immediately gets downticked with decent amounts of sellers. Now, all right, this is the beginning of a stuck long. Generally, when you have such size and quantity forming at an area like this, and you reject down like that, there's a high probability it goes, it fills it, it pops up, head fakes, and then you can see if there's a real offer to get these guys extremely trapped. Now, this is something that I was clearly ignoring in the morning session because if I'm looking at this depth of market right now, what's happening is that there's continuous larger orders on the sell side that are just eating away at whatever buyers are coming into this, right? So this market has opened. It's the replay of the open. And I want to take note of the columns that are coming in here. So what's happening in this circumstance is that there's large numbers, right? Three, 400s, very large quantities that are coming in on the sell side against the buyers and holding their ground, right? They're holding their ground. And even if big buyers come in, what happens generally on this movement is that these sellers manage to push prices lower. Remember, it's all about speed and reactivity when we look at the order flow in the DOM. This area is extremely important because they're building up 900 positive delta here. There's 700 traders that got trapped into the high into that one tick pretty much, and a massive reoffer from the area, right? This DOM right now is looking very, very bearish. There is a lot of sell structure that's happening on this depth of market. As we come into an intermediate level around the 20, right, it holds a little pop. And there are some buyers, right? There's like 600 on the buy side against some of these sellers that are allowing for this push up here. But what's going to be the most interesting aspect of this, the most important aspect of how today progressed is about to come here. And as you see prices falling, you'll start to really understand who's in control. So it was foolish of me to go against the information that I had naturally. It hasn't happened yet, that's why I'm not talking about it. But when we start going through this, and I'll pause it a few times, we'll take a look at what's going on. You'll see that there is a large extension of sell side market ordering in rather than any buy side until very specific areas a lot lower. So let's take a look at what happens here because it's going to be very important. You can see they buy 1,000 again right there. Let's pause this really quickly. What happens in this area is that they load this DOM up like crazy, right? 2,000 go in market by creating a 3,000 positive delta at this 30, the same place as someone bought a lot of size before that. So these buyers buying into a high like this, right? Maybe a big money hedge, but buyers buying into a high like that, right? It's usually bad news for these longs. This kind of quantity, if you can just projectile higher from that and they keep teetering around this area, especially if they move lower and there's a wish wash and they continuously consolidate with bigger sellers coming in, there's a very high probability these guys are trapped or going to get trapped, and there's a continuation to the downside. So you see this pop right now, right? Quantities are okay, I would say. They're pretty solid. But right away into 31, they offer it. Multiple 500 lots come in on the offer. And they're coming back down to target this 30, right? 700 trying to buy. They're trying to support their brethren here that have bought an immaculate amount of size. And you can see, right, 700s, 800s coming in on the bid. But the thing is, the speed, right? Let's pause this quickly. The speed at which each time the rejection comes in from that area, right above this 30, where these guys are supposedly gig along, the speed at which the rejection comes with an offering, right? You get decent size offering, couple of hundred lots here and there, is much faster than the buy side that's trying to play this off. So this, right, especially now, the ease at which we've just dropped two handles under that 30 is very suggestive that these guys are super stuck and they're screwed, right? This is my main mistake of the day. I was looking at those longs thinking I want to get long with them. We're about to break out. Instead of understanding that there was a lot of buyers at that high, right? Well, I do understand this generally. It's just today I chose to ignore it for some reason. But this is where you take a step back and you're like, okay, what the hell just happened? What happens in these scenarios is that they bought a lot of orders at that high, right? Net about 2,900. When they reoffer like that quickly and manage to break back below the area very convincingly, about three handles, right? Very, very easily with decent size, those longs are trapped. They got stuck. They're about to get fleeced. Their stops are going to get ran or whatever hedges. But this gives the opportunity for sellers to come into this very aggressively, and they do, right? They start adding in larger size. Quantities of over 200s are going to start coming in. And what's happening is that we're at the ledge here that creates the top of this distribution, suggesting that there is strong-handed sellers that should be there in theory. So maybe this could be a little lower. I like things to make sense here while we look at this. So you'll see on every pop here, these minuscule baby pops. Every time you get a pop on what looks like a decent buy, right? The buyers are coming in at very small sizes, right? 40s, 50s, 60s. And then the sellers, right? What they do is that they take advantage of these later buyers. These are weak-handed buyers, right? 500 comes in. They're trying to support their friends. Right away, reoffers faster, larger, and lower, right? 500, 300, 300s on the offer. And look at the speed at which the sellers come in time and time again, right? These guys are trapped. Everyone that buys into this high is about to get trapped. I was one of said people. Look at this, 600, 400s coming in on the buy side, 600 trying to hold that out as a seller, 800 on the buy here. And look, every speed move that happens is for the sellers. The quantities that are coming out, right? They're mainly for the sellers in terms of consistency. Because you get a 500, 600 lot buyer here and there. But look, the speed and the sizing that's now coming out belongs to these sellers. There's a much more there's more aggressiveness on this depth of market on the sell side here. And these buyers just this is a desperation buy into these highs, not to fumble this very large bag. But you can see 500 goes offer. These guys right here, let's pause this quickly. Someone throws in pretty much like one tick below the limit, 500 orders. They go market sell 600, creating a large negative delta at 27 quarter. Very large positive deltas have been created between 28 and 30. Very large positive deltas. What that suggests is that there are a lot of traders that are trapped into those highs. A lot of traders that are getting trapped into those highs because they can't get a bid back above those regions. And someone just threw in a shitload of market sellers at that area, creating a barrier for the sellers as well to hold under, right? To dunk their heads. So 28s, 27s here, right? This becomes a new stomping ground for where the sellers are accumulating, have accumulated, and want to continue this leg lower. There's no indication right now that the buyers are going to revive themselves at least into this high. They throw more sell quantity there. Look, 600, 500, 700 is selling. 500. And look at the reaction when big sellers come in. The reaction when big sellers come in is to the downside. This is the fluidity that you want to see from the winner of the trend, right? The directional movement where I chose to ignore this, right? Looking at the buy side, every time a buyer comes in, whether it's big or small, they just get run over and used as liquidity by the sell side that keeps coming in, right? 700 comes on sell, boom, smacks it down right away without allowing this thing to breathe. So if I'm looking at this, right, and let's say I did buy for that breakout at the 28, right? My bad. I get stopped out. And I'm looking at this and I got to pull myself away from this and take a step back, look at this very concretely and think, okay, fair, I got stopped, but should I keep buying this? Right? And if I look at this, number one, we're in the middle of this distribution. There's no real support until we start getting into that like 1820. Or, right, if we want to be really vocal about it, probably close to the 05. Two, no matter who buys this, the sellers come in aggressively, just destroying it, using it as liquidity and putting in more size on the sell. So look, reaction is everything. Speed, size, and reaction. If you want to read the depth of market, you're getting a lot of information here for the bears. They're continuing, right? There's no reason right now to be on this long or try to be getting long. And they come again. 500s, 500s, buyers nowhere to be seen. Reoffer, aggression. They keep coming in. And look, there's this is I did see this buyer into the 17s, like 600 coming on the buy side. And I'm like, okay, let me buy the 17, right? In anticipation that they actually hold a bid there. But as you'll see soon enough, right? Fake bid gets reoffered again. So let's take a look at this. Like I wanted to fast forward this. I went a little too overboard with it. But as we come back into this area, right? These like tens or so, what happens is you get some kind of a bid that steps into the 08, right? Fair enough. And this is the first area. This is the first area where I want to see the bid step in. But even with that, you can see they keep selling pretty aggressively into these lows, right? 400s come in on the offer. They get a little trap there, a nice little bid. So, you know what? Not a bad idea. Try to get long the nines. Not a terrible idea. I see the reasoning behind it. For me, it's a solid trade, right? Take a jab at it. The only thing is offers are still coming in aggressively. take a jab into these lows, right? Look for that upside move. If you get stopped, you get stopped. That's okay. It's a part of the plan. It's at the bottom of the distribution. It just makes sense to try it at that area. You have some confirmation that comes out as well, right? I did try it, but I tried a little late. And what's going on here is you do have some buyers, but look, like they keep selling into this low. They keep selling in this low, and that reaction right there, these reactions, I do like, right? I like for the buy side. I like for that pop. I like for the continuation. They need to really get this thing going, right? And if they can't make the move back towards like key areas like 20 and higher, it allows for the sellers to take control again, right? Because they start selling 700 into this like 12 area, 800 now into the 12, 900 into the 12. Someone's trying to buy it here, 800, 1,000 go on the 12. And you can see the reactivity, right? These buyers aren't really letting this thing go, but the sellers are still very much in control. They allow this to pop slightly, and then what happens is you get just a reoffer that comes in when sellers are looking at this. They're like, oh, okay, that's enough. That's enough. You know what? Let's put these buyers in their place where they belong, reoffer this aggressively. They had their fun. They get like 5, 6 points out of this, but that's enough. Because you're looking at this, right? And based on this dominance replay, I have no issue with buying that 9. I should have already been long, right? And looking to cut some into these areas, but there it doesn't look like that bad of a trade until they start coming back down this aggressively and just against these buyers. So let's see. Like, as I look at this, I still don't see it as that bad of a area for these longs to step in. Now, I did buy into this area, but I bought it a little late after these pops had solidified because you'll see very soon enough once we take another visit to these nines, right? They start coming in with a little more speed because what you're seeing into these 13s, 12s is larger quantities on the sell side start coming in, right? If we clear this, we'll start to see these new. When you see, like, the first bid come in and the first rebid off of a low or of a high, that's when you wanna get it. You don't wanna wait too long for this thing to toy around, right? Unless there's something very, very drastic into the low or the high. For example, if at this low they accumulated massive, massive negative delta and a lot of stuck traders, then you know what? Okay, fine. Maybe we can toy around a bit and see if new buyers step in. But the second we get back into these areas, you can see the sizing of the sellers that's coming in is very, very aggressive. Buyers are trying to hold on to this, but the sellers start hammering this more and more realistically. They start coming into it, they're digging in, and you're going to see that we're not going to hold into this area. You come down into the O3s, it's another potential region where these buyers can step in, but it, at that point, once they start knifing through that area, remember, if we take a step back and understand what's going on based on these distributions, you take a knife through that O5, what happens is you enter into a distribution block to the downside, a new distribution lower, and at that point, it should be a beeline to the next logical support, which happens to be into that high 80. And like you come back into the '09, the prior lows, what's happening is they're selling aggressively into that low. They're offering aggressively without like imbalanced sellers. It's not a scenario where you have so many sellers that they don't move price and they're getting stuck. It's just gradual large sellers coming in. And you want to stay away from movement like this if you're trying to buy it, right? If you're on the short side, great. You're coming down into the '05, into the '04 area. And you can see they just keep selling into this low, right? Three, 400s into the low. No one's allowing for a bid. These passive orders get absorbed aggressively. '04 here. Look at that. 1,000 tries to sell into it. So, okay, this is the thing. Similar to what had happened at that 30. 1,000 net negative delta at '04. Massive seller comes in, they dump it through it. If they catch a nice aggressive bid back above to '05, '06, for me, buyable region, right? That means they're getting stuck and there's a rebid. What happens in this circumstance, though, is just you get back into the distribution. They open the floodgates. So, right, logically speaking, if I'm looking at this and I have to take a step back because I just got stopped out, if I'm looking at this from a logical perspective, we have now entered a distribution block to the downside, right? And we have a massive, massive seller that just sold into a prior pivotal low, and we're now 5 points under that seller. I want to sell at '04 to accept down into 88. Whenever '04 trades again, there's a very high probability that it is going to hold out, right? The first test generally. But you can see these guys just like floodgates are open at this point. You're going to look for that move down into that 90, that 88, 87, something like that. And you can see they just keep selling aggressively into these lows, 6, 500s. Constant offers. Whatever bids come in just get reacted against by the offers. '91s, right? Like everything is just getting blown apart here. Now, right here, 90, let's pause this quickly. You can see at 90, 91, right? What's happening in this region is, again, same story. Massive selling into a low. Huge selling. 1,000 plus negative delta, 1,000 plus lots at two levels coming into the bottom. These areas, right? This auction generally is completed, meaning a push down. And should we hold a nice aggressive bid on good size, that is going to be a bottom area. This is a very important area for buyers to step in. Again, it's a decent area on the profile as well, where prior buyers stepped in before, right? So we want to take note. Look at that. Rebid right away. Boom. Right? Slaps the bid on this right away. So when I'm looking at this, right, I'm entertaining this area for the longs, right? Maybe I can get along the 90, right? Maybe I can get along the 90. Maybe I want to wait to see if there's more buyers that step in, because right away, massive sellers come into the lows, rejection, massive buyers, 900, multiple lots of buyers allow for a rebid very aggressively. And these are the times, especially in a large downside move that's happened, that you want to pinpoint where they're getting trapped and where the buyers are actually stepping in, right? So alternative number one, you buy it, right, back down into this 90, 89, or number two, you wait to see how that area actually sustains as a bid. So let's see. We're coming back to our area. Offers are looking happy again. Like 600, 700s getting sold into this low. 900 on the offer, right? They trade into this 88. What I like about this is that big buyers are starting to step in, even though, it's getting pulled down a little more here, right? There's large buyers, 87 quarter. Again, a massive guy gets trapped into that low. Gets so again, same thing. Huge seller comes in 1,000 at that low 87. Same thing as what happened at that 90. They complete that auction, massive bids come in, right? They're starting to chase price on this. This, right, into 89, 90. I think these are very qualifiable longs based on traders getting trapped. People are starting to chase prices higher. The bid's holding out now. This is actually one of the trades that I did take. That was actually a good trade that ran for nearly 20 handles. Because the accumulation of all these sellers into these lows and the first real reactivity from the buyers, right? Buying 900, 700, 1,000, and actually projectiling price higher, right? For me, look, 1,000 goes long, 800, 900 goes long, and they push this thing back up immediately. For me, this is a very, very strong area that the buyers are going to want to sustain from that 88 to 90. So let's see, right? They pull back, give you a chance to get in. They get a lot of guys stuck short at that 88. That's beautiful, right? 88s, again, accumulate a massive negative delta, stuck short, rebid, and that's your move, right? I want to fast forward a little here until we get towards that 04, because remember, we've accepted We've accepted into the distribution to the downside from the 04, 05, 06 region, right? Multiple levels. But what happens in this area is that someone sells, right, net negative 1,000, and they immediately drop like almost 20 handles. These are circumstances where you can almost just blindly sell into the area, right? There's some kind of a pullback, I believe, that happens here. So, okay, they're trading back into the area, into this 04, right? These big sellers, they're pushed aside just slightly. And look, the sellers, they're going to start coming back in again. Larger quantities of sell, 400s, right, on the offer here. 400s trying to bid, 600 now on the offer. Another 500 gets thrown in, 800 on the offer. There's a huge fight here between sellers and buyers. And if they start accumulating back below that 04, you've got something that's pretty fresh for that downside momentum move. And there it is, nice reaction, right? You're probably going to see a little more downside from that area because when you break through a key region and you have a lot of buyers or sellers. In this case, if you break through a key bottom with a lot of sellers into that low, there's an extremely high probability that those sellers are going to actually hold. So let's take a look at this, right? I want to see also the buildup into that mid to high 70, right? To wrap this up, that caused this massive turbo bid. Let me just clean this. Oops. Just clean this up. Da da da. They hold temporarily. Make that a little more visible. Okay, so let's pause this here. We're coming into an area of interest. Number one, you have a very large passive orders that are resting at that 75, right? Number two, at 81, massive, again, negative delta shapes up. They just cleaned up a lot of the auction there. So what happens at this 76 here, right? Let's keep an eye on this. You're coming into a key area based on where that distribution ledge is. You can see it over here. Well, even without that, right? What's happening right now is that sellers, right, obviously in control, but some of the buy side that's coming in on a rebid or an attempted rebid is starting to look very interesting. 900 coming in on the sell, 970 at that 77 three quarter. And this is what I like about that. So again, when you come into an area into a low and they throw in larger quantities into that low and it just only trades the market sell. So 260 come here at 75 half, right? Instant rebid, decent size, 300s, 300s. I like that, right? I like that as an opportunity for the buyers. Now, what you could wait for is that you clean up this auction, you fill this big resting order, and then you get bid back up, and then you start buying it, right? That would be the safer play. Because when you get an order that's like 200 plus lots into a low on the S&P, there is a pretty high probability that that auction has to be cleaned up a little before you can get the reversal. So those auctions, they get cleaned up and then they head fake a little lower before they spark a reversal to the upside. Let's see here. Gotta wait for this thing to come back down. So it cleaned that auction up, rebid, and now like you're pretty good into buying that 75, 74 area, right? Like these are like acceptable longs, right? If I go into this like little sim area, these are acceptable longs once that auction gets cleared. I was long from a little higher around like 76. And that's it, right? As long as this area doesn't really get tested too much again, and we can start bidding back through, the target obviously is going to be 88 and above that. You have a pretty clear sky ahead, right? As long as prices, you can hold out above like 74, where they kind of got head faked into, and prices can start moving back above like 85, 88, you can just hold this. You're probably going to get a move to 48.05, right? And that's pretty much it. So when we look at this, right, when we just stop this replay and we go back to reality, one of the main things that I learned from this day, right? That I've done before. I've learned this before. It's a lesson that I have learned many, many a time. And learning it so many times has allowed me to be okay with the larger drawdown came about because that larger drawdown came not from my plan, not me not trading said plan, me not and not following information that was clearly profiles on whatever it was. That's where this drawdown stakes came from. There was no need to buy this thing several times, right? Those like it's the market, right? These things happen when you're trading, these things happen. The goal is to sniff them out as quickly as possible and see if there's something, an opportunity that you can change so you can come back from that either loss or maybe you can just call it quits for the day because again like I've said before it's extremely important to understand where your trade should be, what the direction of those trades should be based on your system, based on mine, for example, with profiles, order flow, and volume. And understand that you have a daily maximum drawdown on the day and you don't want to exceed that. So let me just open up these trades yet again here for us to take a gander upon. And here it is, right? Only 2 good trades out of too many that really allowed me to come back from the day. And that's it. Massive, massive learning lessons. We'll see what tomorrow brings, and we have to keep in mind what our distributions are, what our plan is, and how to set that up. Otherwise, right, it turns into a day like today where emotionality and tilt take control. And if you can't take a step back and divide yourself, right, from trader and let's say trade manager and take a look at this and say, okay, like what are we doing here? Take a bird's eye view of this, then you got to stop at some point, right? You got to be able to do that. Otherwise, you got to distance yourself from the computer and really reevaluate what's going on. So I hope you enjoyed this and thank you and take care, everyone.